Hello everyone, Lee Lowell here, smartoptionseller.com. Today is Saturday, July 11th, 2020. Welcome to another edition of the Saturday Synopsis. We like to take a look at the charts, see how the market has done over the last week, and kind of give some opinions on what we see going forward for the next week. Today's a very special day. Today is my birthday, 7/11. Yes. I will not tell you how old I am, but let's just say I am on the back nine. Okay, so what are we going to do today? And in honor of my birthday, I'm going to give you all the three top stocks that I am looking at right now on a bullish basis. So let's get started. We always open up to the SPY, which is the ETF tracking index for the S&P 500. It is a tradable ETF. And we like to look at the SPY, the NASDAQ Composite, and the Dow Industrial, see how all the indexes are doing. As we've been talking over the last number of weeks, we talked about the coronavirus meltdown and the rally back up. Over the last couple of weeks, been pretty tight range, hasn't gone too far, either higher or lower in the market. It's been pretty tight here. It had moved above the 200-day moving average, which we always talk about, this flat moving average line right here. Market popped above it, formed the island top reversal. Market moved down, moved up, moved down, moved up. It has bounced nicely off the 200-day moving average. And so we've kind of been just meandering around here. This is what happens in the summertime. Things get a lot slower. But I do see a little bit more of a bullish bias. Yesterday on Friday, July 10th, the market closed right at the top of its range. So looks like we still have some strength, even though the coronavirus here in the US has been ticking up case-wise. But the unemployment, although still high, has been coming down a little bit. So people are getting back to work. Let's just see what's going to happen. We've got second quarter earnings coming out over the next few weeks. So we will get a taste of how the coronavirus really affected companies' bottom line. So that'll be very interesting to see over the next few weeks. We get a lot of the big name players coming out with their earnings. So let's take a look at the Dow Industrials and the NASDAQ. Let's pull up the Dow. Okay, right here. Now, as we've seen, the Dow has been the laggard of the three indexes. It is still having problems popping above the 200-day moving average right here. And every time it pops up to it, it gets knocked back down. So the 200-day moving average is very stiff resistance right now. So the Dow is having a lot of problems with that. The way I see it right now, moving forward, it will probably still meander around here. If it could get some good motivation and pop above the 200-day moving average, then it will continue on along with the S&P 500 and the NASDAQ. Let's take a look at the NASDAQ real quick here. NASDAQ has been the strongest of all the three indexes. I had drawn this resistance line a few weeks ago before the NASDAQ actually popped above the line. Thought it might have been forming a double top formation. 1, 2, it's called a double top formation. Popped through, came back down, and then just strongly has gone above. It's gone well above 10,000, gone above 10,500. So there really is no stopping the NASDAQ at this point. You got to go with what the market is telling you. The market is telling you it wants to go higher. So we got the NASDAQ really strong, above all, it's above all of its moving averages. Let's take a look back at the SPY real quick. The SPY also above all of its moving averages, at least what I use on the charts. We got a 50-day, a 20-day, and a 200-day moving average. So that's strong as well. So the Dow seems to be the laggard of the three. If the Dow can pop above its 200-day moving average right here, this line, then it will join the NASDAQ and the S&P and will probably have a nice strong move up. Once it gets to that 200-day moving average, look out, it'll probably keep going. And we also look at the VIX every week. The VIX is the volatility and fear indicator. The VIX is based off the S&P 500 near-term at-the-money option prices. And when a market sells off, volatility jumps up. And that's represented by the VIX. And when the market rallies, the VIX comes back down. So we look at the VIX every week. It is coming right down onto its own 200-day moving average right here. You can see it's been bouncing off of it. If the VIX bounces back up, that only means the market is selling off. If the market itself keeps going up, the VIX will most likely pop down below its 200-day moving average. So what is the assessment for the week going forward? Well, you have to go with what the market is giving you. You have to go with the momentum. You want to trade with the direction of the market. You don't want to try to be contrarian because the market will railroad you. And so right now the market is still telling us we want to stay on the long side of the market because it's showing you right here. It wants to go up. Although it's been a little flat, you have to go with what it's telling you. So stay long for now until the market shows otherwise. And just so you know that you don't want to try to pick tops or short a market that's got a lot of momentum behind it. And I've shown this chart last week. This is a chart of Tesla. Okay, everyone's been trying to short Tesla. Tesla is one of the most shorted stocks out there, and the shorts just keep getting burned. Look at Tesla, another new high, all-time high, $1,544 a share. It's just been incredible. So be careful if you're trying to short a market like that that's got a lot of momentum behind it. You will get burned, so don't play with fire. All right, so what are we going to do today? So as I said, we always like to talk about options and option strategies. So today I'm going to tell you about the 3 stocks that I'm looking at right now that I really like, that we want to get bullish, and I'm going to show you a few different ways that you can play it. First stock on the list is Procter & Gamble. Why do I like Procter & Gamble? Well, we always look at the charts because that is my first way of assessing the strength of a company. There are some people that like to look at fundamentals and some people like to look at the charts. I'm more of a charts guy. I've always been under the assumption that all the fundamentals of a company, which is its earnings and price to earnings ratio and cash balance and all that, is always reflected in the charts. So I concentrate more on looking at the charts. Procter & Gamble is, I believe, one of these essential companies. It sells all kinds of products that you and I could use for everyday living. It had a little meltdown in the coronavirus, just like everything else, but it's come back nicely. And the reason why I like it is because the price is above all of its moving averages that I use, 20-day, 50-day, and 200-day. As long as the stock is above the moving averages and the moving averages themselves are either flat or turning upwards, that means the stock has some good momentum behind it. We look at the RSI indicator down here, which is a overbought and oversold indicator. Procter & Gamble, right in the middle, moving up a little. So I have no worries that it's neither overbought nor oversold. So we go with the momentum. Procter & Gamble looking pretty good. Another chart I'm looking at, stock I'm looking at, is Colgate-Palmolive. Once again, another company that sells products that you and I can use for everyday living. Also had the meltdown, rallied back nicely, and it seems to be uptrending. Once again, it is trading above all of its moving averages. The moving averages are either trending higher or flat, which is good, and the RSI right smack in the middle, which doesn't give me any reason to worry that it's either overbought or oversold right now. So I like the momentum behind Colgate-Palmolive. Chart number 3. We talked about this company before. Hormel. Hormel is another company, very, very stable. And I will also show you something else in a minute about why I like these 3 stocks. Hormel, definitely stock is moving up. Okay, we always want to see a stock going from bottom left to upper right. That means it's in a nice uptrend. Okay, it's definitely hovering around its moving averages here. It's well above the 200-day moving average. 200-day moving average is sloping upwards, so that is good. So Hormel has some momentum behind it, bullish momentum. That's why I like the stock. Also RSI, right in the 50 range. Typically overbought is 70, oversold is 20, 25, 75, and 25. I'm sorry, those are the typical defaults. I like to move mine up to the 80 and 20 level to give myself a little extra cushion. So it's right smack in the middle here, like Hormel, for a bullish trade. Now, let me also show you why I like these 3 stocks. something that we've talked about before, the dividend aristocrats. Okay, this is a Excel spreadsheet you can get at dripinvesting.org. Right up here is the link. Okay, it tells us all about the dividend achievers and dividend aristocrats. And these are companies that have raised their dividends for X amount of years in a row. We like to talk about stocks that have raised their dividends for at least 25 years in a row. Dividend kings are those stocks that raise their dividends for 50 straight years in a row, which shows solid balance sheets that the company is very confident in their own earnings potential. And if they raise their dividends, that means they're confident that the earnings are going to increase for the company. So we look at this Excel spreadsheet. All three of the stocks that I'm talking about today are on this list. Let's take a look here. We've got Procter & Gamble right here, has raised its dividend for 64 years straight. Excellent. What else are we looking at? Hormel right here. Hormel Foods, 53 years in a row. It's raised its dividends. And Colgate-Palmolive. Where are we? Colgate-Palmolive right here. 57 years in a row, raised its dividends. So these are three solid stocks that we are looking at right now for next week and beyond. And how do we play it? So if we're bullish, how do we use that? How do we play it? Well, I put up a little document here. 4 ways to play a bullish prediction. Number 1, you can buy the stock. Okay, you can buy as many shares as you're comfortable with. You can sell naked put options, something that we do specifically in the Smart Option Seller newsletter. You can sell put option credit spreads, also something we do specifically in our vertical spread trader newsletter. And lastly, you can buy deep in the money call options. I've talked about and written about deep in the money call options many times in the past. You can go to our website, look back at our blog, you can look at the articles that I've written in the past. So these are 4 ways that you can play each of these stocks. Now, I just want to remind you, these are not actual recommendations. These are examples I'm giving here, but these are 3 stocks that I'm looking at. And most likely in our 2 newsletters, we will probably be playing any or all of these 3 stocks in the upcoming future. So bullish prediction, here's 4 ways you can play it. I've also written about this in the book that I've written, Get Rich with Options. Now, before I sign off today, I just want to mention to you, you can go to our website at smartoptionseller.com. Click on the Put Selling Basics tab right here at the top. You will be able to download our free Put Selling Basics ebook. Lets you learn all about how to sell put options. Okay. Services tab. You can click on any of the 3 links to learn a little bit more about our 2 newsletters. Smart Option Seller newsletter sells naked put options, and Vertical Spread Trader sells put option credit spreads. These are all how to take advantage of flat or rising markets. We also have our one-on-one coaching. So that's it for me today. Make sure you like this YouTube video. Give me a thumbs up. Give me some comments if you wish. Don't forget to subscribe to the channel so you'll never miss another update. That's all for me today. I hope everyone has a good weekend. Have a good week ahead. And shoot me an email every once in a while. Let me know what you're thinking. Okay, that's all for me. This is Lee Lowell signing off.